So what in the world's going on today that might affect housing? And we focus here on the channel is we focus in on mortgage rates and mortgage programs to get you guys into housing if that's what you're looking to do. So in today's news or today's events, there's only really one thing happening, and it is right here. It's Jackson Hole and Federal Chairman Powell. So what is this? How is it going to affect the markets? That's what we're going to talk about today. So my name is Dan Free. I do this report on a daily basis to inform you guys what in the world's going on in the economy and what in the world is going on with housing. So we talk on this channel is I really don't talk about housing prices because it is so sectionalized. So you take the West Coast. There's parts of the West Coast that went 40, 50% in the last 2 years went up, and they're having some pullbacks. It was predicted. Okay, so then we have in the Midwest. In the Midwest, we're seeing still the same the same uptick in our housing prices that we've normally seen every year. We didn't have that huge spike of 10, 15, 20%. We just tick up about 4 or 5% a year, and it's been steady that way ever since the last 2-3 years when people were predicting a crash. And then on the East Coast, it's all over the map. So if you're in the southern part, you might have some issues down there. On the middle of the country, it's okay. And on the northeastern, it's doing really good. So in today's news, all we have is really Jackson Hole and Federal Chairman Powell. So what in the world is Jackson Hole? So what happens is all the bigwigs throughout the whole world, yes, the whole world, goes to Jackson Hole, and they talk about the state of the economy, what's expected, and so forth. So Federal Chairman Powell is going to take stage here shortly, and his word, every word he says is going to be dissected, and that drives me nuts, how one person can control this market. So based on what he says, you might see the stock market go up 1,000 points. You might see the stock market go down 1,000 points. Same thing with mortgage rates. We sit on the sideline just sitting here waiting. Okay, if he says one word out of whack, it could send the bond market crashing or plummeting or rising out the roof. We don't know. So we stay on the sidelines just to, understand what he's saying and the whys. But let's go through some of the things that we're going to look at. The first thing we're going to look at is the CME. This is the Chicago Mercantile Exchange. This is actually where people are betting their money on what the Federal Reserve is going to do with interest rates. So you see here, they have a CME Fed Watch tool. This is actually watching the Fed saying, okay, what are they telling us? What's actually Wall Street? Where's Wall Street's money going? Telling us what's going to happen. So we go down through here. This is saying, what's the likelihood the Federal Reserve will change the target rate at the next meeting? Well, the target rate right now is 5.25 to 5.5. That's the rate that they control. They control the federal funds rate. You go down through here, and what is going on with that? Well, right now we have an 80% probability they're not going to do anything. Okay, so that's still intact. It was about 85 the other day. After today's speech, you're going to see this move a little bit. But what I try to explain to everybody on a daily basis is you're also going to hear things about the dot plot. What is the dot plot? Well, basically the Federal Reserve, when they meet, there's many members of them. They sit there and they throw darts on a board expecting where they want to put the federal funds rate this year, next year, and the years forward. So what you're watching on the screen right now this is where the Federal Reserve is expecting rates to be. So if you go all the way over here, if you see it right now, they're saying the federal funds rate should be 5.5, maybe 5.75. Okay, so that means there's a possibility that there's one more rate increase coming. When that's going to be, there's only a couple more meetings in this year, but let's forward fast to next year. This is right from the Fed. The same members that put these dot plots over here have put these dot plots over here. If you see right through there, if you go across, that means the rates on the federal funds rate, they expect, this is from the Fed, they expect the rates to be at 4.25. Okay, so if we're at 5.5 right now, or 5.75 here, maybe some people are predicting that, and we go down to 4.25, that means the Federal Reserve has to at some point start pivoting and start driving down rates. Well, in the next 12 to maybe 16 months, they're expected to reduce rates by 1.5%. That's from the Fed, folks. That's not from me. So I try to come out here and predict, what I'm expecting from rates and everything. So with that data that we have, and then the economic data for this week, which was really not that much. We have existing home sales came in kind of in line, building permits kind of in line, servicing sector, servicing markets going down a little bit. So there's signs in here that the economy's okay. I'll just put it that way. So based on that, what's my expectations for rates? So let's get over to here. This is the bond market that we're looking at. I expected this. Zero. There's nothing going on. There's basically nothing really going on Wall Street right now because everybody's just sitting on the sidelines seeing what Federal Chairman Powell says. So here's my expectations. He's going to come out and he's walking a very, very fine line because it doesn't matter it does matter what he says, but it's also his mannerisms, how he answers questions. Is he smooth up there? Is he a little jittery? Is he asking the questions that he's being asked? Is he precise with it, or is he kind of, I don't know. So here's basically what they face. They face this. If they come in, they see a lot of these numbers coming down. Okay, inflation last year at this point was about 9%. It's just a hair over 3% right now. So going in a fantastic direction. But if the Fed comes out, especially Federal Chairman Powell, he's sitting in front of the world basically, and he's sitting there. If he says, well, you know what, everything's kind of really cooled off, we're going to stop raising rates, and next year we plan on pivoting because everything's starting to look really good. Well, what's going to happen? Well, all the work that they've done is basically going to be sucked out of the market. You're going to see the bond market rally, and rates are going to drop tremendously. Well, not tremendously, but they might drop at least a half a point. Then you see on the stock market then at that point is going to say, okay, we know the Fed's out of this. So why is a lot of this happening in the stock market and the bond market? Well, basically what the Fed did, let me explain kind of a little bit of what they did. They raised rates astronomically. As you know, they probably, I think it's like 8 or 10 times, the most ever in history and the most incremental increases ever in history. So what they affect is basically short-term rates, like your credit cards and your car loans and things like that. But it's also the short-term bonds. Short-term bond yields are up to about 5.5%. You can get a 6-month basically bond, or a government bond, about 5 to 5.5%. So now you're thinking, okay, I can get a guaranteed 5.5%, or I can keep my money in the stock market or other kind of bonds, or all those have risk. In this market, we know the Fed's saying, well, we got to crush the economy, we got to crush housing, we got to crush the jobs market. So if you're uncertain, why don't you just move your money over to short-term, notes and ride out this storm? That's what people are doing. So the stock market still, you can see on a daily basis, it's way up or way down or way up or way down. But the bond markets you're seeing through here is basically flat because people aren't buying mortgage-backed securities. They're not buying corporate bonds. What they're doing is they're buying treasuries, short-term treasuries, because the Fed has increased those rates so high. It's a viable solution for your investments. So I'm not predicting, or I'm not saying that's what you should do, but I moved a bunch of my money into a 18-month CD recently at about just shy of 5%. 5%. Okay, if I left it in my savings account, it was getting 0.005. So what do? That's why a lot of banks are saying, oh my God, people are just pulling money out of our accounts like crazy. Well, all they're doing is they're just, instead of in this savings account, they're moving it over to different kind of bond structures, but they're still saving it. Okay, so that's what's going on in the economy. What do I expect? I expect the Fed to just kind of draw on a narrow line today, really not say anything of substance, because they don't want the market either to crash or to really rally. So I'm predicting this is probably going to be the high on our 10-year yields over through here. So I'm predicting right now this should be the high on mortgage rates, hopefully for the next 10 or 15 years. So from here on out, I'm expecting rates to kind of stabilize and start to deteriorate a little bit from here over time, all the way through next year. So if you're out there and you're like, Dan, what do you do? And thanks for doing this channel. Well, what do? I'm a mortgage advisor. I've been doing this for years and years and years. And if you're out there and you're like, Dan, I really need help getting pre-qualified. I'd like to buy a house because in my market, I'm in a stable area. My job's good. The kids are in school. I'd like to buy a house. I don't want to be at the landlord's mercy. If that's you, or you maybe need a reverse mortgage. So if you, maybe your parents, maybe your grandparents need a reverse mortgage, we do reverse mortgages. In most cases, we waive our origination fee, or at least we cut it in half. It's going to save you thousands and thousands of dollars. Or if you're out there and you're like, hey, I got a ton of equity in my house, but I got a lot of credit cards too. I'd love to get those consolidated. Reach out to me. I'll give you my information at the end of the video. What you're seeing on the screen right now are the top 6 programs that people use when they're buying a house or refinancing. So on your screen, you have the 30-year fixed all the way down to the 30-year VA loans. This is just a national average, folks. What Mortgage News Daily does is they survey lenders all over the country, and they say, if you had a borrower that had this criteria, they were a first-time home buyer, buying a single family home, and it was going to be their primary home, those three things, and they had a 740 credit score with 20% down, what would be their rate? And when they get all these rates in, they blend it, and here's where they come out to be. So you might say, Dan, that rate is lower than what I got. Well, did you put down 20%? Do you have a 740 credit score? Is it a single family home? Those are the things that might affect what your rate is. So how do you reach out to me? We got a new revised website. Let's check it out. The rate update right here. This is our website. If you'd like to reach out to us, there's many ways you can do it. The first way is down, see up there where it says apply now. You can click that, and what that does is it schedules an appointment with us. Okay, you might say, Dan, I don't need an appointment. Well, you might need one. A lot of people disqualify themselves, or a lot of people think they do, they can qualify and they don't start the process. They just start kicking tires and looking at houses. Well, many times that is not the truth. So please reach out to us. We would like to just go through some questions with you just to make sure, okay, everything fits. Well, now let's spend time getting your application put together. But if you're out there and you're like, Dan, I'd really like to call you. How can I do that? Because, that's probably a simpler way to get us. Here it is. Go all the way down the bottom, 844-775-LOAN. That's 844-775-5626. Or you can email me at dan@therateupdate.com. I'd love to hear from you. Thanks so much for watching, guys. Have a fantastic weekend. God bless. And don't forget, if you haven't subscribed yet, please subscribe down below. And if you like these videos, please don't forget to give me a thumbs up. God bless you guys. Thanks so much for watching. See you next week. Bye-bye.